If you're thinking about buying a house, you have to be pre-approved.
If I'm looking at 5 to 10 offers, the first thing that I do is I look for reliability and trustworthiness.
Getting a reputable company behind you on the lending side is absolutely needed.
There is no surprise that we are expecting another competitive spring market. What can our clients and our consumers be doing to prepare themselves from a financial aspect to be most competitive in that market?
If you're thinking about buying a house, you have to be pre-approved. Right. And everybody always is a little bit worried. I say always in the past, they've been worried that I can't have my credit checked. I can't have my credit checked. Well, we do soft credit pulls now for our pre-approvals.
Explain that to people, because I know there's a lot of confusion over what is a soft credit pull.
Yeah. So soft credit pull it's literally like it never happened, but it gives us all the scores and all your current debts. The scores are really close to what the hard report is. Oftentimes it's 100% exactly what it was, but it allows us to actually do our jobs, to talk. It gives us credit scores. We can talk rates. We can talk down payments. It allows us to do our job and officially pre-approve someone just without that credit ding. Because if you get pre-approved in December, let's say, and you don't buy until July, in the old world, you'd have to get your credit checked again. Now we don't. We keep updating the soft pulls.
So a soft pull is kind of like going to Vegas. Whatever happens there stays there, and it doesn't have impact on what you do all the time.
I'm totally taking that.
So we've talked about this concept ad nauseum, but we have to say it again. To be competitive in this market, right? And we know it's going to be competitive. Aligning yourself with a mortgage professional, a reliable, reputable mortgage professional, is like the first step possible.
Yeah. I talk to a lot of people who, if they're referred by you, it's golden, right? I'm typically the first conversation, or one that, they've talked to somebody else, but it wasn't, on the level that
one of those pesky online mortgage lenders.
Exactly. The ones who don't return emails, who are hard to find, right? Things like that. But it is about with whom you work, especially in Chicago, right? At Properties, rate, they help win deals, and they're both trusted names. So getting a reputable company behind you on the lending side is absolutely needed.
Who you're working with on both the agent and the lending side is so important. If I'm looking at 5 to 10 offers, the first thing that I do is I look for reliability and trustworthiness. Hopefully I know the agents and the lenders in it. I do most of the time, but if I don't, I'm absolutely looking for the companies that I know tend to have more professionals working and aligning with them. 100%.
Yeah, it's and it really does cost people over time. You just said it. Your offers aren't paid attention to, right? If they don't know the company. And yes, if I were shopping for mortgage, I could shop it till for 48 hours straight, right? I'll eventually find some rate that's so good, it's too good to be true. And 98 times out of 100, it is too good to be true. Lenders hide fees. They hide points. They do all kinds of stuff. They don't mention it, but they quote the rate with it.
Yeah.
Right? So time and time again, I often will take somebody's numbers if they question what I tell them and pick it apart and say, nope, that's wrong. That's wrong. They're adding fees that don't exist in Chicago, whatever the case may be. Or in Chicago, they forgot the transfer stamps.
You buy your way into Chicago and you buy your way out.
Yes.
It's a relative comment.
It's a big number, right?
Yeah.
It's a big closing cost that needs to be discussed, because a lot of times I've talked to people as the second or third person and I mention transfer taxes and they're like, no idea what you're talking about. It's mind-boggling to me that people can be in my job and not actually talk about.
There's a lot of smoke and mirrors,
yes.
Right? It's not always as clear and transparent as it should be. But I actually want to take a step back, because I know you mentioned before about that soft credit pull. I want to go back to that for a second, because I think people are nervous about that. But I think the point that we kind of tiptoed around was there is no such thing as starting too early. Right? There's no aligning your team, finding your people. People just don't come to us and say, okay, I'd like to buy a house next week. A lot of times we're working with these people for 3 to 6 months to put them in the best position, because hopefully not the case. But I know sometimes you do that soft credit pull, and sometimes there's something a little pesky that needs to be cleaned up on that. And you work with your clients so that 3, 6, 9, 12 months later, they're in the best position possible.
Yeah, we can identify if there's collections on there that aren't correct, or there's some late payments that they thought they had fixed that they didn't. We can also we can look at their debts and reallocate them. If they have one credit card that they use exclusively that they aren't paying down because of a bonus or whatever, we can move some of that money to another card and improve their credit scores. So we can dive in. I can dive in and tell people in like the percentages of likelihood of if we pay a card to zero, what's going to happen to their scores. Because in the conforming loan amount space, anything under now it's $806,500. Credit scores matter huge.
Right.
780 is different than 779. 760 is different than 759.
Yep.
So little changes like that make a big difference. And we can not only can we fix it beforehand, we can also, if we have a quick closing like we've had in the past, we can get somebody fixed in a week and get their credit score updated, get them a better interest rate.